Hello and welcome to the Today's Money Masters. I'm Jean-Paul Manu. The Today's Money Masters competition comprises 3 professional investors and a novice, each provided with $500,000 to invest. The participants will invest in stocks, bonds, and collective investment schemes, and they will share their strategies over a 1-year period. At the end of that period, the top portfolio manager will be declared. So let's continue with the masters on this very exciting journey. Now, a word from our sponsors. Welcome back. On today's program, we are joined by Andre Yap, one of our professionals. He's from the Credit Union Fund Management Company Limited. Hi, Andre. How you do?
Not too bad, thank you.
Good. Welcome. Always nice to have you.
Thanks.
Andre, everybody's talking about this coronavirus situation. How do you think the virus will it have a significant impact on the stock market and the economy? What are your thoughts?
I think it's pretty much a foregone conclusion where everybody has kind of decided that the pandemic event can have an effect on the economy.
Sure.
I mean, we really don't have to look much further than our neighbors to see the effect that it's had. We can look at the United States economy and their markets to see what's happening. We can look in Europe, we can look in China, we can look all around and kind of see that, the pandemic event can have a negative effect on the economy and markets. What might be a mystery to some people is how exactly it can have an effect on what those effects draw from. So I would like to kind of look at it more from an economic basis as opposed to looking at it from a market basis, say stock market or this, because I view the stock market as really a subset of the economy. So pretty much they go hand in hand.
Sure.
So what can happen in the economy is that what we have are what I think is one of the primary drivers is we have supply side shocks. So what I mean by that, essentially, supply side basically the means by which we get goods and services, right? So if we think of it for a practical example from a manufacturing perspective, let's say we're a manufacturing company here in Jamaica and we get our inputs from outside nations. Let's say Jamaica, by some miracle, is technologically advanced and we manufacture cell phones, for example. Cell phones have 1 million components. It has screens, it has circuits,
yes.
It has batteries, it has camera lenses, it has all these wonderful things, have LED lights, all that stuff. Right, but we have to bring it in from other countries or other suppliers. So, for example, we might get the screen from Korea. Korea right now is one of the hotspots for the coronavirus, so we might have a problem getting our supply from there. Right? The lenses for our camera, they may come from Japan. They have a little bit of issue with coronavirus, so we might have issues getting our supply of goods from there. So there we can see where we can have some issues with manufacturing. But it doesn't have to just be international as well. It can be local. We could have a situation where, simply put, we have a firm and our workers, they're sick. They can't come to work. They can't produce. All of a sudden, we can't make as much goods to meet the demand that is necessary or to make as much goods as we normally make. So right there, we have issues with actually churn out supply. And it all boils down to usually our general labor is what it really boils down to. It boils down to people. People are sick. They can't come to work. They can't produce.
Sure.
So that's what I think it boils down to. But we're not just looking at manufacturing or physical or tangible goods. If we look at it as well from the perspective of services, it also applies there, because if someone is sick, they're not able to deliver a service.
Right.
If we want to look at it from our perspective, from a practical example that we ourselves are experiencing right now, if we think of tourism as a service we provide to the world, where essentially, if you want to tie a practical good to it, it's sun, sand, beach, all around good time, hotels, all that nice stuff, tourism, right? So because of the virus now, we're a bit more stringent with who we will supply that good to. People are screened coming off of cruise ships. If you're from a certain area, you're from China, you're from Korea, you're from a problematic nation where it has heavy exposure to it, where we're on our P's and Q's, we might not want to provide you with the service.
Absolutely. And the cruise shipping industry is taking a big hit as well.
Well, I mean, it's impacted. I can't speak to the magnitude of the hit, but we can see where, ships are delayed. They're not allowed to come into harbor and that type of stuff. Right. Same thing with air travel. We have actual travel bans for people arriving from a particular destination where we won't allow them in the country. So you can see right there, we're not supplying them with that tourism product anymore, with that service, so to speak. So it's on both sides.
It will have definite impacts, for sure.
Yeah, but it's not just on the supply side. We also have a demand problem as well. I mean, if you think about it, the psyche and the shock of the virus, think about it. You're at home. your most outgoing friend, the person you know who touch road every weekend, who is at, the big parties, who wants to go out for dinner every Friday, who wants a little drink up, what are they saying right now? Yo, me, I tell them, yard, nah, gone away. So when you think of that happening now, you have demand going down as well, because people are somewhat a bit afraid. They're not necessarily looking to have that disposable income being spent in that way.
Right.
They're not looking to go to restaurants to patronize them. They're not looking to go to parties to patronize them. And that has a knock-on effect, because the restaurants, they have suppliers as well. They have to pay the guy that supplies them with chicken or beef or liquor or whatever. The party is the same thing. They have to pay the guy that supplies them with the liquor, with the electricity, even electricity right there. And we know that commercial events like those, they pull a lot of power. So even JPS might be affected by this, because all of a sudden we don't have these party events. We have, for example, Champs, that's a big event right there, that was cancelled.
That has been cancelled, yeah.
So we can have demand knock-on effects from there as well. But the thing is that it's not necessarily all doom and gloom with the coronavirus. I mean, for economies and markets. The impact of the virus or the pandemic, however you want to express it, it's largely dependent on a couple of things. One, how deep or how wide does the actual sickness spread? So obviously, the more it spreads, the more impactful it is for us here, is the more likely it'll have a big impact on the economy. The other thing is what are the policies that we ourselves will put in place? How much responsibility will we as individuals and as a country take for ourselves? For example, will we adhere to the hygienic protocols and so forth? Will we adhere to declaration protocols? Will we stick to the quarantine protocols? We also have to think about employers and government as well. Will they put in policies and safety nets to somewhat enhance people adhering to policies to not spread it? So
how much can they afford to do that?
Example, will they
how
be liberal?
disciplined can we be?
So for example,
stick to that, right?
Will employers be liberal with sick days?
Right.
I mean, I don't know about you, but I've worked at numerous places, and a lot of the time people come in sick because there's a culture of we need to get the work done.
Yeah.
You're sick, but you can work through it.
Still running, right? Right.
So will that change? No. Will they be more liberal with it to say, hey, you have a cold, you need to stay out for at least 14 days, when most places give you a 10-day sick leave? Will the government actually be there and say, hey, we're going to step in, and for people who don't have the benefit of having even any sick days, for example, a security guard to say, if you're sick, we will cover your lost income. Because if you're not earning that income, you really don't have it to spend anymore.
Right, of course.
You can't spend it on goods and services anymore if you're not earning it. Okay. So these are the type of systems that we have to ask. I think the other question is, where do investors go from here? How do they react to this? Is it a situation where there need to be a fire sale where everything must go? Do they have to be calm and composed? Do they hold? Do they sell? What do they do? I mean, I think each individual investor will have to ask that question of themselves. And it has to come back to, what were their investment objectives at the beginning? What's their investment philosophy? What's their investment timeline? Okay. And these are the things that they have to ask themselves and then come to a decision of. When you're looking at companies, am I investing in a lot of cyclical companies that are going to likely face some hazards? Am I investing in defensive companies? So by cyclical, I mean companies that react to the economy. The economy goes up, the company is great, it's fine, it's dandy. Economy goes down, it's in a bit of trouble. So they react a lot more readily to the business cycle.
But you would encourage people to stay calm, still, right?
I wouldn't encourage people to do anything, quite frankly. I would encourage them to look at themselves and look at their portfolio and to come to a decision with someone who is intimately aware of that, so be it their investment advisor or someone else. I'm not really in tune with their personal needs to say, hey, everybody do this, or everybody do that. I think it's on an individual basis, and people have to decide what is best for them in the context of their objectives and their risk outline and all that good stuff.
All right. Wow. Well, we'll keep an eye on this. We'll see how things hopefully will go over the coming weeks. Hopefully, it won't be that bad. More with Andre after a word from our sponsor. Welcome back to The Masters. We're speaking with Andre Yap this week, one of our professionals from the Credit Union Fund Management Company Limited. Andre, you were saying in the previous break, in reaction to the coronavirus in Jamaica now, everybody's going to have to make their own decision. Each person will have to make their own decision regarding their stocks, bonds, etc. What are you going to do with your portfolio?
That's a very good question, John Paul. For me, we have to remember the context in which I am investing. So people can't just do what I'm doing because I said I'm doing it. So the context of my investment is that this is a competition which ends in July. So it ends in probably another, 3-4 months, right? So I have to maximize what I can in 3-4 months.
Sure.
This isn't because I'm a long-term investor. So, and we also have to remember that I'm playing with house money. It's not really my money.
Right. Okay.
So
That's fair. All right. So with
it's
that,
important that they have that context.
Sure, in that context.
So because this is a competition where the objective is to maximize your actual holding at the end, your actual dollar figure, what I plan to do is take profits where I can in the downward pressure of the market, because there's a lot of selling pressure. We see where prices of a lot of assets, or practically all the assets, are really going downwards. So if I'm in a position to take profits or to take even break even on some of those assets, I will do that and reassess. For the assets where right now I'm already in the red, that gives me a bit of a conundrum. Do I take the profit? Do I realize the losses right now and just go with it? Or do I wait it out and see if maybe this is an overreaction and hope that the market somewhat stabilizes, quote unquote, stabilizes, and I'm in a better position next week or the week after? That's a precarious position right there. Frankly, I'm not quite sure what I'll do right there. I'm leaning towards the stereotypical investment philosophy, investment psychology. I'm leaning towards essentially the stereotypical investor psychology where people are slow to realize losses, where you don't necessarily want to sell very quickly to see those negative figures become a reality. That's where I'm at the moment, but I'm assessing on a daily basis to see how the market reacts, to see if there's any inflection or anything turn around to say, hey, the bids are looking a bit thicker right now, where people are essentially bidding for larger volumes, and the prices are going up, and the sales are actually drying up, where there isn't a lot of what I would call, or some may call, panic selling, where people are just disposing of assets at prices which, compared to 2 weeks ago, you'd say, wow, this is crazy. It's like 30% below where it was 3 weeks ago or something like that. I'm just throwing out arbitrary figures. But,
Okay.
yeah.
All right. Well, that's why I was asking you before about people shouldn't overreact. And panic selling doesn't sound like it would be a good thing to jump on.
Here's the thing. I can't say for everyone. I don't know what everyone's situation is. You know? You could be someone who have your last dime in there and you don't necessarily want it to go from being, it's already down from being whatever it is to something to go to being even less than that. So I can't speak to that.
In that case.
I can't speak generally because every individual is different. Every individual has different needs. Every individual, they're in a different circumstance. So I don't want to say anything too general and people say, well, yep, say this.
The man said, right. All right. Okay, that's fair. So you're keeping an eye on your stuff, and you'll see how it goes in the coming days, coming days and weeks. All right, cool. Let's switch gears. The local currency, as you know, has appreciated from around the exchange rate moving from 141 to 136 to $1 US. Do you expect this trend to hold over the next couple of months, or the next few months, 3 months?
I mean, it's hard to say. So, I mean, there are two aspects to it. Both of which I've had discussions with people today. So when you think about foreign exchange and the context of the market that we have right now, we have to remember that we have to look at it in the context and see that we're in somewhat of a volatile market, where we see, there's a little bit of scare regarding the coronavirus and potential. I've heard this word this word tossed around, recession and bear markets and so forth. So we have to look at it in that context. So generally, when there's some volatility in the market or there's some expectation of a negative outlook, what you'll have is that people will fly towards safety, right? So what that means is essentially they'll switch out of assets that they perceive to be risky, such as stocks, into assets which they perceive to be of less risk, so such as treasuries. Right, so one of the predominant treasuries that people like to purchase during these times is the U.S. Treasury. So, of course, that brings up the demand for U.S. dollars, which, of course, they use to buy these treasuries. So we could see some appreciation stemming from that, but that's from a theoretical standpoint. We know that trade is happening internationally, but I don't know how much it permeates throughout our Jamaican economy here, how many people or large parties are actually engaging in that type of trade to say the Jamaican dollar will appreciate or depreciate. Another conversation I had today was about oil prices. So oil is a major import in Jamaica.
Right.
It's probably one of our largest, if not the largest import. So when you think of oil prices coming down, that puts less pressure, less demand on the need for US dollars to actually secure that commodity.
Right.
So from that perspective, there's also less pressure in terms of demand for US dollars. So we could see this actual exchange being maintained or probably being moved the other way from a practical perspective. But if you're asking me which way I would place my bet, I would just abstain from the bet altogether because I don't know. Foreign exchange is one of the most volatile things that you can actually try to predict, particularly for the long term. So if you ask me for 3 months, I definitely wouldn't take that bet to tell you which way it's going. Ask me for tomorrow, I probably still wouldn't take the bet. But it's one of them that's pretty hard to predict.
But this is a nice move, though, from 141 to 136. Gives us a little bit more.
Depends on where you are. If you're holding US dollars that you just bought at 145 and it moved down to 136, you're not really feeling good.
Not feeling so great.
But the other way around now, everything's a matter of perspective.
Yes, of course. All right, cool. Well, we will keep it there for this week. Andre Yap, thank you so much for your thoughts. That was Andre Yap this week from the Credit Union Fund Management Company Limited, and we'll speak again with him in a few weeks' time. Join us again next week, same time, for another exciting episode of the Masters Competition, as we'll meet with another one of the participants. Follow the pros and the one novice each week here on the Masters Competition. Listen and analyze the strategies with the Masters on Radio Jamaica, Thursdays at 8:45 a.m. as they challenge each other to stay ahead. Also, look out for their portfolios in the Financial Gleaner. The Masters Competition is a product of Today's Money Limited, brought to you in partnership with NCB Capital Markets Limited, Money Masters Limited, Credit Union Fund Management Company Limited, and the Jamaica Stock Exchange. I'm Jean-Paul Manu. The Masters is another fine product from Today's Money Limited.